Look at this chart for a second. Most traders would completely ignore what you're seeing right now. And that's exactly why they keep losing money, even when price looks easy. Watch the spot carefully. Nothing dramatic happens here. Price moves, but accounts die. Now watch what changes before the move actually starts. This is the moment most traders are already trapped. And when this flips the other way, retail traders don't react, they chase. I'm not going to explain what this indicator is yet, because if you don't understand the mistake first, the strategy won't work for you anyway. The biggest reason traders lose isn't bad entries, it's trading during the wrong market condition and blaming the setup instead of the timing. In this video, I'll show you how I use two free tools to avoid the dead zones and only trade when the market is actually paying. But first, you need to see what most traders never notice. Right now, I'm not asking you to memorize anything, just observe. Here, price is moving, but nothing meaningful is happening. This is what range looks like before losses pile up. Now compare that to this section. Price starts respecting direction. Pullbacks make sense. Moves actually follow through. And here's the important part. This indicator reacts to short-term behavior. That's powerful, but it's also dangerous. Because watch this. This looks like an uptrend, right? Many traders would buy here, and they'd feel smart for about 5 minutes. But zoom out. The bigger trend is still down. This is where most traders get chopped up, not because the indicator is wrong, but because it's incomplete. This is why I never use this tool alone, and if you do, you will eventually give back your gains. This indicator is called Sentiment Range. It's completely free on TradingView. I'll show you how to add it quickly, but don't skip this part, because the default settings will sabotage the strategy. So, in the settings, I changed the length to 21. This makes it responsive enough to catch momentum, but not so sensitive that it flips consistently. Trigger smoothing goes to 5. That filter noise, but not signals. Neutral color stays white because I want ranges to be obvious, not distracting. And this option here, wait for time frame close, is crucial. Without it, you'll react to signals that never actually confirm. Now, this still leaves one problem. We've handled short-term direction, but we haven't defined permission. That's where most traders break their own rules. The second tool is called Biscalado Limit. I don't use it for signals. I don't use it for entries. I use it to answer one question only. Am I allowed to look for buys or sells? But first of all, let's adjust it. I set both moving averages to simple. The first one is 200 SMA and the second one is 300 SMA. This forces the indicator to respect the bigger picture. I also disable all shapes and signals. If you're looking for arrows, this strategy is not for you. Now, when price is above the green cloud, I only look for buys. And when price is below the red cloud, I only look for sells. No exceptions. This alone removes a huge percentage of bad trades. Now let's connect this to the structure. In a downtrend, price creates lower highs and lower lows. When a lower low breaks, continuation is likely. And in an uptrend, it's the opposite. Higher highs, higher lows. When a higher high breaks, price has room to move. So, let's walk through a buy setup step by step. First, long-term trend is up, price is above the green cloud. Second, short-term trend is also up, price is above the sentiment range line. Now we wait, no chasing. Price pulls back and dips below the sentiment line. This is where impatient traders enter early. We don't. Instead, we mark the most recent swing high. This level matters because it's where buyers previously failed. Now watch. Price moves back above the sentiment line and breaks that swing high. That break is the trigger. A stop loss goes below the recent swing low or the cloud or the sentiment line. No guessing. And the target is simple, 1.5 risk. Now the sell side. Long-term trend is down. Price is below the red cloud. Short-term direction aligns. We wait for a pullback above the sentiment line. We mark the recent swing low, and then when price drops back below the sentiment line and breaks that swing low, that's the sell. Same logic, same structure, no emotions. The strategy doesn't predict, it filters, and that's why it works. So if that helped, smash the like button and subscribe for more trading strategies just like this. Happy trading!